Hey, what's up everyone? Welcome to our channel. Today, we're diving into the fascinating world of investing, a topic that can seem daunting for beginners but is crucial for building wealth and securing your financial future. In this video, we'll break down the basics of investing, explore different types of options, and explain why these concepts are essential for your financial growth. Investing isn't just for the wealthy or financial experts, it's for everyone. Whether you're saving for retirement, a home, or simply looking to grow your savings, knowing how to invest wisely makes all the difference. We'll cover stocks, bonds, mutual funds, and real estate, giving you a well-rounded view of the investment landscape. Throughout this video, we aim to keep things engaging and informative with relatable examples and straightforward language. By the end, you'll have a clearer understanding of how investing works and why it's vital to personal finance. So, if you're ready to take the first step towards financial empowerment, stick around. Let's get started on this exciting journey together. Before diving into the world of investing, it's essential to identify your personal financial objectives. Whether it's saving for a dream vacation next summer or building that safety net for emergencies, short-term goals keep you grounded. Long-term, that's your retirement by the beach, or finally owning that cozy home. Aligning your investments with these aspirations is crucial for making informed decisions. For instance, if you're saving for a house in the next few years, you might prefer safer investments that preserve your capital. If retirement is decades away, you've got the gift of time. That means you can ride the highs and lows of higher risk investments and aim for those big rewards. Having a clear financial roadmap helps you stay focused and measure your progress along the way. It's like having a GPS for your financial journey, guiding you to your aspirations step by step. Take some time to reflect on what you truly want and let that guide your investment choices. Now that you've identified your financial goals, it's time to explore the various investment vehicles available to you as a beginner. Stocks, bonds, mutual funds, ETFs. Sounds like alphabet soup, right? Don't worry. Breaking these down is easier than you think, and understanding them is your key to smarter investing. Stocks represent ownership in a company. When you buy shares, you're purchasing a piece of that business. Stocks can offer high returns, but they also come with higher risk. Bonds are loans you give to companies or governments in exchange for interest payments. They tend to be more stable than stocks, making them a safer option for conservative investors. Mutual funds pool money from multiple investors to purchase a diversified portfolio of stocks and bonds. ETFs are like mutual funds but trade on stock exchanges, offering flexibility and often lower fees. Take the time to research and understand each investment type. Knowing their risks and rewards empowers you to make better choices. Remember the importance of diversification. By spreading your investments, you can reduce risk and enhance potential returns. A well-diversified portfolio helps you weather market fluctuations and stay on track toward your financial goals. Creating a budget for investing is a crucial step in your financial journey. It's important to set aside a specific amount for investments each month, helping you build wealth over time. By allocating funds specifically for investing, you're committing to your financial future and actively working toward your goals. Start by reviewing your monthly expenses and savings. Determine how much you can realistically invest without compromising essential needs. This might involve cutting back on discretionary spending or finding ways to increase your income. Even if it's a small amount, the key is to create a budget that allows you to invest consistently. Before investing, it's vital to maintain an emergency fund as a financial safety net. An emergency fund covering 3 to 6 months of living expenses can prevent you from dipping into investments during tough times. By prioritizing both your investment budget and emergency fund, you're setting yourself up for success. Remember, investing is a marathon, not a sprint, and a solid foundation will keep you on track for the long haul. Choosing the right brokerage account is a pivotal step in your investing journey. There are several types of brokerage accounts available, each catering to different needs and investment styles. A traditional brokerage offers personalized advice and research, ideal for hands-on support. Want more control and fewer fees? Online brokerages give you the keys to your financial car. You're in the driver's seat and the road is yours to explore. Robo-advisors use algorithms to manage investments based on your goals and risk tolerance. When selecting a brokerage, start by reviewing the fees associated with each platform. Some brokerages charge commissions on trades, while others offer commission-free trading. Next, evaluate the services offered. Do they provide educational resources, research tools, or customer support? User experience is critical. A well-designed interface can make managing your investments much easier. Finally, read reviews and compare platforms. Hearing from other investors can provide valuable insights. By choosing the right brokerage, you'll set yourself up for a smoother, more successful investing experience. Now that you've laid the groundwork, it's time to take the plunge and start your investment journey. Now remember, you don't have to go all in right away. Starting small is perfectly fine and often recommended for beginners. By investing a manageable amount, you can gain valuable experience and confidence without feeling overwhelmed. Once you've made your initial investments, regularly review and adjust your portfolio. The market is dynamic, and your financial goals may evolve over time. By monitoring your investments, you can make necessary adjustments to stay on track. Continuous learning is also key to successful investing. Stay informed about market trends and new opportunities. There are countless resources available, from books and podcasts to online courses and financial news websites. Markets are like roller coasters, full of twists and turns. But here's the thing, it's the long ride that counts. Strap in, hold tight, and trust the process. By starting small, monitoring your progress, and committing to ongoing education, you'll build a solid foundation for your financial future. So, take that first step today and embrace the exciting world of investing. As we wrap up this video, let's recap the 5 essential steps to get started with investing. First, understand your financial goals, distinguishing between short-term and long-term objectives. Next, educate yourself on investment options like stocks, bonds, mutual funds, and ETFs. Then, create a budget for investing, ensuring you allocate a specific amount while maintaining an emergency fund. After that, choose the right brokerage account, considering fees and user experience. Finally, take the plunge and start investing, while regularly monitoring your progress and committing to continuous learning. Remember, taking action toward your financial goals is crucial. The sooner you start investing, the more time your money has to grow. Fear and uncertainty, they're just roadblocks on the highway to wealth. Even baby steps move you forward. Just keep walking. If you found this video helpful, please subscribe for more valuable insights on investing and personal finance. Don't forget to like this video and share it with friends or family who might also benefit. Your support helps us create more informative content and reach a wider audience. Thanks for tuning in. Ready to keep exploring the exciting world of finance? Hit subscribe and let's keep this journey going together.